The S&P 500 is up 73% in 18 months after hitting its lows in March 2020. Ever since then, people have been questioning the rally, saying stocks are overvalued, but it hasn't stopped or really even slowed down. Let's go to Steve Leisman now for the latest from our CNBC Fed Survey. Steve?
Yeah, Kelly, our survey respondents, as a general rule, believe the market is overvalued relative to their earnings and growth forecast a lot of the time, certainly during the rally you just described. So the news in this survey is that while still a majority, the lowest percentage of respondents since March 2020 think stocks are overvalued. And that, by the way, came before Monday's sell-off, those results, that is. 56% say stocks are overvalued. That's the lowest, as I said, there since the spring, when the decline signaled a pretty good buying opportunity from this group. It's down substantially from the 70-90% level where it was a lot of this year, so it was a bad signal then. The S&P seen topping 4,500 by the end of this year and rising to 4765 by the end of the next year, that is, while the 10-year forecast ended up just above 2%, and that's at the end of 2022, so low interest rates forecast during most of the period. Of course, these relatively positive outlooks come amid expectations for the Fed to cut its $120 billion in monthly bond buying in the months ahead. The taper announcement seen coming in November and starting in December and proceeding at a pace of $15 billion in reductions each month. The first rate hike not seen till December 2022. Richard Steinberg writing in saying that a slow and steady taper should be positive for equities while others still worry about high valuations and inflation that could hang around, Kelly, longer than the Fed expects.
What would you say, Steve, is the biggest surprise? You know, again, we're asking a lot of economists and that sort of thing about the market, but obviously their bread and butter is watching the Fed. And what is your takeaway here?
You know, I'm not surprised, but there was a shift, obviously. There were a lot of folks who in early August thought this taper announcement could come tomorrow. But COVID came along, you had that weaker jobs report, so they shifted. They went out to November expecting the taper in December. I think there's still some slight possibility that this time tomorrow we're announcing a taper, but I think that the market expectation has moved out at least 2 months or one meeting.